Costing prepared and presented by Mr. James. An important reminder that this presentation is designed to be accompanied by the reading of chapter 36 in your textbook. Before we could go into any question, we need to review the manufacturing account that we had done last term. Most of manufacturing is done by businesses that produce their own goods to sell, and they have to know the cost of producing those goods. To determine this, they must have an account called the manufacturing account. Other names for the manufacturing account are cost sheet, total cost sheet, production cost account. Sometimes you see cost of finished goods produced, cost of goods manufactured. Okay, they are all the same. Once you see this word manufacturing or anything close to that, production and stuff like that, you know it's a manufacturing account that you're dealing with. Okay, a simple version of the manufacturing account. It has 3 sections. Each one of these here represent a section. One for the raw materials, one for labor, and another one for other costs other than materials and labor. That is all overheads. Overheads is just another name for expenses. Okay, you add all 3 together and you get the total production cost incurred. A more expanded version of the manufacturing account. 2 sections this time. One for the overheads and one for the prime costs. The prime cost is made up of what they call direct costs. You see the word direct here. Right? And the overhead section is made up of indirect costs. Okay? Direct costs can be traced to the product itself, and overheads or indirect costs can be traced to the factory, but not to the product itself. Okay? Things like direct materials, if you have a bakery, that's a small factory in a sense, and you're making cakes, all the ingredients that go into the cake itself directly is called direct materials. So you get things like flour, sugar, and the like. Okay, the indirect materials, on the other hand, although you're using it in the bakery to make the cake, things like gas to the ovens and things, right, do not go into the cake itself, so it's not direct materials. They would be indirect material. Okay, butter to grease the pan and so on, not part of the cake itself, so that would be indirect material. Okay, same apply with labor and indirect labor. Direct labor would be the people who actually making the product. It is sometimes called touch labor because they handle it, they touch it, the product. If you're looking at a furniture factory making furniture with wood, those who actually touch the wood and make the product out of the wood, the chair or the table or whatever it is, right? People who cut in the wood, people who shape in it and so on the lathes and things, they are direct labor. The people who working in the factory but not touching the product is called indirect labor. people like the supervisors. Okay, they don't work on the product itself, but what they do is they supervise the people in the factory. Okay, other indirect labor would be cleaners and the janitors and so on. They come around and sweep up the sawdust and clean out the machines, and then afterward they are indirect labor. Their wages would be indirect labor. Okay, so all the indirect cost comes down here. Things like rent and so on, you can trace it directly to the cake. Okay, so you can put it under overheads or indirect expenses. Depreciation, factory power, those type of items would make up your overhead. But the main qualification here is that it must be for the factory, not the administration building, but for the factory. And you cannot trace it to the product itself, but you can only trace it to the factory. So you have to allocate it to the factory, right? You cannot allocate it to the product up here. It's not prime cost. For the other direct costs, the problem you're working on will tell you it's a direct cost. Okay. Another work example, which gives you the cost of the raw materials consumed. This heading here, we have some data here, and we're going to use it to make up this section of the manufacturing account. It's cost of direct materials consumed. That's this top section here, direct materials. Although the amount is not the same, the section is the same. Okay, so you once you have this heading here, you don't need to have both direct and raw, right? One or the other could do, right? And once you have this up here, you don't need to be saying materials, materials, and raw materials, right? Here, you could have add carriage, and you know it's on direct material because they're in the heading already, right? Opening stock, 300,000. Purchases, 250,000. Carriages on the raw material, 10,000. Now, if this looking familiar, is because you had done the same thing in the income statement of a retailer, right? Their trading account is made up the same way, okay? And the carriage must be added on to the purchases. If you take the carriage, and you would get 1 mark for adding it on to the purchases here in an exam. If you add it on down here, you will not get the mark. So, although you would still wind up with 130 here, you will not get the mark because you have it in the wrong place and you are adding it to the wrong figure. It's wrong accounting. Okay, the carriage is regarded as part of the cost of the purchases. That's why you add it on. Okay, if you order when you order KFC, right, and the guy transporting it to bring it to your home, he charges you a fee, right? And that's the cost of the product as well. Okay, you add it on and then you pay the guy. You can't say you're not going to pay that, otherwise you'll get no KFC, right? Less return outwards, right? The return outwards comes out of the purchases here that you bought. It's goods or raw materials that you send back, right? So you have to minus it out here. Again, you cannot minus it out somewhere down here. You will not get the mark for that. Okay? So you maintain the same format and you'll wind up with the cost of material consumed being 130. Now you could do this section, you have options. You could do this section here in your workings and just put the 130,000 in the manufacturing account as they have this 120 up here, right? Or you can take the whole thing and put it into the uh, manufacturing account like they do here. No, well, they didn't do it here either, right? But in the next example here, you have it here, right? Now the whole thing, cost of direct materials consumed here, 400,000, and they add the labor and the direct costs, and we get prime cost, right? So you have options, you can do it that way or you can do it the other way. All right, another work example to illustrate something else. You can be given your figures like this, a whole column of figures, and asked to draw up your manufacturing account, and then you have to go and do like this. Or you can be given it in a trial balance form. Okay, so look out for that. Here we have another one. This time we have what is called additional information here. Now, before you can put these figures into your manufacturing account here, you have to adjust it for these here. By adjust it, we mean you take into consideration what is being said here, right? I'll just go through the adjustment because the other figures go in just as they are, right? Franchise fees are treated as direct costs. Okay, you notice same thing I just told you. When you have a direct cost that goes in here, they must tell you it's a direct cost. Otherwise, you wouldn't know to put it here, right? Incidentally, you learn something from this here. If you see franchise fees in our next question, you know it's going to go here, right? And they didn't tell you it's a direct cost. Then you should put it here. Okay, right? The factory manager's salary is treated as indirect labor. No, I just stated that. That means you're going to go to factory manager's fees, salary 72,000, right? And you will put it under overheads, factory manager's salary 52. Or this is the indirect expenses section, right? Depreciation is to be split 80-20 between factory, and it should be factory and administration, right? So 80% of the depreciation, we get the depreciation of 120,000. I would take 80% of it and we get 96,000. Right? The other 20% will go in your income statement. Right? Sometimes you are not given the depreciation here, but you are given the formula to use and you have to calculate the depreciation and then apportion it like this. Lighting and heating are shared between the factory and it should be the office, right? Piece of missing here, I couldn't get it to slide along. Right, so we know that it's to be shared between the factory and the thing. So lighting and heating, so 2/3 from here we know it's 2/3. 2/3 of 75,000, 50,000. Okay, basically what is happening is you have in your books total expenses for the factory and for the offices in some cases, and you have to split them up on the basis of usage, right? Rental fees should be apportioned 60% to the factory, right? So 60% of the rent is for factory. We take rent from here, 80,000, and multiply it by 60%, and we get 48%. Okay. Usually the maths required here is just a matter of being able to understand percentages or fractions. We have insurance, 15,000 is attributable to the factory. We put in the 15,000 here. Okay, now we notice you have 18,000 here, so only 15,000 goes in here. Total overheads, we add down this column and we get 301. Now, when you add down this and you get the 301, students tend to forget that they have an add here, and they minus this from that, like in our income statement. But you are not, all of this is cost, dealing with cost, right? The whole thing. So you have to add here instead of minusing your expenses. So 800,000 add 300 gives you 1100. Next, we have what is called work in progress. Now, in all factories have work in progress because at the end of a day, what happens is some of your goods are still in process. It looks something like your SBA. If you start your SBA yesterday and you work on some of it, it's a work in progress. It didn't finish. You'll continue it today and you'll work on it again and perhaps you'll work on it tomorrow. So it continues to be a work in progress until you finish it. From the time you start to the time you finish it, it's a work in process, right? And you have to account for it because it is of some value to your business. The way you account for it is to add on the work in process at the start or the beginning of the year and minus the work in process at the end of the year. Okay, you could do it this way, or you could add this 25 to that, get a total, and then minus the 15,000 from the total. You'll get the same thing, right? Or you could do it this way as well. But be careful when you're doing it this way, because if the work in progress at the end is bigger than the work in process at the start, you will get a negative figure here. And you can't add it on, you will have to minus it, okay? Right, so that takes care of the adjustment for work in process here. Remember, add on the opening minus the closing. The closing, when you do a manufacturing account, the closing stock is always minus, right? Regardless of what it is. Whether it's raw material, work in process, finished goods, closing stock is always minus, right? Or bracketed. Transferring cost of goods manufactured to the income statement trading account section. We hadn't done this before, but the best way to do it is to illustrate it with an example. The accounting records of San Fernando Manufacturing Company include the following information at the year ended 31st December 2011. And we have that year and here. The figures are here, and it's the beginning of the year, right? So at the beginning of the year, we have work in progress as usual, 20,000 and 40,000 at the end of the year. Our inventory of finished goods, okay, this is stock that has already been manufactured and in the warehouse. We have 120,000 at the 1st of January. At the end of the year, it's 160,000. And then we have the material used and the labor and the overhead, right? So right here, you have the figures for your manufacturing account. You see selling expense here, 300,000. So they just throw this in here to see if they will take it and use it in the manufacturing account, right? But selling has nothing to do with manufacturing. It doesn't add to the cost of manufacturing the goods, right? So you will exclude the selling expenses. You are required a cost of goods manufactured statement. Yeah. Somebody talking? Okay. Part B, 14,000 units were produced during the year. Calculate the cost per unit. Somebody has unmuted themselves and they are disturbing me, right? Please mute yourself back. Cost of finished goods manufactured. This is a simplified version, just showing the sections. Direct material use, 400,000. Direct labor, 240,000. Manufacturing overhead applied, 360,000. You get total manufacturing cost, 1 million. To that, we add the work in progress at the beginning, we minus the work in progress at the end, and we get the cost of finished goods manufactured. Simple. Now, the question really is, what do we do with this when how do we get, right? When we doing our cost of goods sold in the income statement, we take the opening inventory of 120,000, right? This figure comes from here, the finished goods, 120,000. Notice the one at the end of the year is 160 at the same time, right? We add on the cost of goods manufactured to it. Now, this is coming from the manufacturing account here, right? 980,000. And we put it in here. Cost of goods manufactured. Now, this figure actually replaces what used to be the purchases figure here for a retailer of goods. Someone was not manufacturing their own goods to sell, but they were buying it from somebody else. Then we used to have purchases here, opening inventory, add purchases, right? In this case, we are buying the goods, so we don't have a purchases figure to put in here. We cannot put the purchases of the raw material here because that would be incorrect. This is dealing with finished goods. We add on the cost of the goods manufactured from the manufacturing account here. We get 1,100,000, and we less the closing inventory, 160,000. We saw that just now. We'll get the cost of goods sold, which we will minus from our sales, and we get our profit, our gross profit. Okay, so this is where the cost of goods manufactured comes in. It replaces the cost of goods, sorry, purchase. Okay. Calculating the cost per unit. The cost per unit, the formula is cost of completed units of production over number of units produced, right? It's an average cost. When time you take in a total cost and divided by the number of units, it's an average cost. It's not done according to FIFO or LIFO. This is done according to the average, right? So for San Fernando Manufacturing Company, the cost per unit was 980,000. Sorry, the cost of manufacturing all the units were 980,000, and we had 14,000 units. We divide it and we get $70 per unit. So the unit cost of production is $70 per unit. Okay, we can see that here. 980,000, right? And 14,000 units were produced. Okay, so we take the 980 and we divide it by 14,000 and we get $70 per unit. So in any problem that you get, the last figure at the bottom of the manufacturing account, you divide it by the number of units and you will get the cost per unit. It's a normal part B or part C of a question to get in CSEC in your exam, right? To calculate the unit cost of production. Right, we want to take a quick look at what your problems would look like for CXC. Okay, sometimes you are going to be given the information like this, in a column like this, and you have to arrange it into a thing. Or, right, you use this format, 2 columns, right? One for the direct cost, one for the indirect cost, and then you add the two together, make the adjustments for work in progress. Okay, you can also get your data like this in a trial balance form. Now this, to get it to fit on the screen, I had to shrink it down a bit, right? So, but you can still make all the figures, right? But this is in a trial balance form, and you have to prepare a manufacturing account, income statement, and a balance sheet. Okay, the manufacturing account would look like the top part here up to the production cost of goods completed would be 1 million here. That's the manufacturing account from up here come till here, down to here. Then we start the income statement from the sales here, less cost of goods sold, and it goes through the normal process here. Now you can divide up your costs into administration expenses, selling and distribution expenses, and financial charges like this, if you know which one is which. If you don't recall in an exam, just lump all of them together. It would not be wrong. Okay? Right? Now, what you can also do is in your workings, you can add up all the administration costs and put it in one figure here. Then you add up all the selling and distribution costs, and then you put it in one figure here. You can also add up all of the financial and put it as one figure here, and then you just add these three, and you get your total here, right? And this is minus from that to get your profit here. Okay, so you wouldn't see, in that case, if you have done that, you wouldn't see this column at all. Okay, the balance sheet, the net profit from the income statement comes in here, 89.8. You could see it here, 89,800, and it comes in here. And notice the 387 balances with the 387,600 here, right? Of importance here is that the inventory or the stock is made up of 3 items now, right? Raw materials, you'll have a stock of raw materials in your factory. You'll have a stock of finished goods that you already make. And as usual, you will have work in progress that you're working on. Okay? Work in progress is sometimes called work in process. It's the same khaki pants, right? Accounts receivable, bank cash, you have all your current assets under one heading. And all your non-current or fixed assets up here. Okay? And you balance off here. If perchance your assets and liabilities here does not equal your capital here, you do not go, it is unbalanced, you do not go looking for any errors. You wouldn't get marks for balancing these here. What you get marks for is having these things under the correct heading here. So you have classified your assets and liabilities properly. Okay, so that would bring us to the end of this presentation. I will allow you